Welcome to Drill Down Earnings. We have the latest quarterly results from SAP. This is the business story behind one stock on the move. I'm Cory Johnson, Epistrophy Capital Research's chief market strategist. So SAP earnings, why do we care? It's a dominant company in software and changing a lot through AI and that old-fashioned adoption of the cloud. Very important this quarter. Third quarter results, Wall Street likes a beat or a miss, and this is a beat slightly. But let's talk about how this company did well. Slightly better than the estimates, maybe more importantly, raising their guidance going forward around their cloud computing business and software revenue, of course, doing very well here. When we dig into the business here, we saw that the cloud computing backlog business up 25%. That's really good, given that they had about 9% revenue growth. Cloud revenues up 25%. It's their ERP business, the biggest business they have, up 34%. All very good. So again, 9% revenue growth, steadily improving from where this business was a year and a half ago, and a positive sign there that they've been able to hold on to that. Not quite what it was last quarter. When we look beyond the headline numbers, again, this company is dominant in enterprise resource planning, ERP software, which can take years for companies to roll out, but you see the growth that they have in their business overall, but specifically outside of the US. Yes, it's a German company. So in Europe, they're seeing 29% growth, unlike 19% in the Americas, but also Asia Pacific region, 40% growth. So really strong business across the world and growing in places outside of the US. Cloud now, for the first time in a long, slow transformation for this business, a majority of revenues, 50% of revenues, 52% of revenues, I should say, greater than software, greater than services, licensed software, I should say. And that gradual diversification towards the cloud has been good for their business and good for their profitability. When you look at it more simply, just cloud versus non-cloud, like I said, cloud's over half the business now for the first time ever for SAP. So how did the market react when they saw these numbers and saw the raised guidance? Well, the market liked those numbers quite a bit. In after-hours trading, the stock was up 4%, even before the conference call started. The conference call was generally bullish as well. On top of the 76% the stock has grown in the last year. Now let's talk about the ERP business, because that really is the big giant here. And it's the sticky business. It's the backbone of most businesses that use SAP's software. It's difficult to integrate. Companies are so dependent on it once they install this software. And it's really difficult to rip out once it's installed. And that's been, for this company, meant stable long-term customer base and gives them a chance to sell more, and we're finally seeing them do that. ERP software is like I don't want to say it's like a Roach Motel. Let's think of it like the Hotel California. You can check in anytime you like, but you can never leave the ERP of SAP. And indeed, that's what we heard from CEO Christian Klein when he talked about what's happening with the cloud and with ERP.
This large customer clearly understood, when I really want to transform, it's not about putting my ERP on a cloud infrastructure. It's about the business processes first. And actually, the cloud is also giving SAP and the customer the discipline to get the complexity out of the business processes and the differentiation with AI, with the vertical extensions we build, but we don't customize. We drive discipline, we drive productivity. And now when we look at the methodology and then how we can measure the custom code, how we can support this project and really giving them the productivity numbers before and after and giving them the status, this is great. And then obviously it's on the customer, as I said earlier, Mike. No one goes in and says, hey, I do it all at once. This would completely overload every IT organization on the planet. But what we're then saying is, hey, where is your highest pressure? Is it in the front? Is it in the supply chain? Is it in the core processes, of your back offices? And then we go in.
So you can hear in that the story of how AI is transforming not just the software that they're selling, but the way their customers are using that new, sleeker, better operating ERP software in new ways at all of their customers. A good sign for SAP. Well, what's it all mean? Your drill down earnings takeaway? Look, the one number that means a whole lot. Yeah, I've got that. So let's look again, our summary. SAP third quarter earnings, your essential numbers, 9% revenue growth, consistent revenue growth in the last few quarters. We like that for this business, specifically emphasizing growth in the cloud and an ERP business. Their ERP suite, 34% revenue growth, really strong for this business. But again, I think the most important number, the one number that tells us a whole lot, is that cloud business is now more than a half of SAP. It's taken them a long time to get there, but they're finally there. 52% is that number. All right, thanks for listening to Drill on Earnings. I'm Cory Johnson.